in reality, Bitcoin's monetary properties being absolutely scarce and verifiably scarce, also 24/7, 365, not to mention it's a $2.4 trillion asset now, so it's highly liquid as well. And so it's essentially these monetary properties combined with its 24/7, basically instant liquidity globally, mean that it can be, and it's designed to be, eventually the apex risk-off asset, meaning that it's an asset that you want to own all the time, not just in periods where the market environment allows it to be a desirable trade, right? You don't want to own the S&P 500 all the time. When business and credit cycles are in a downturn, you don't want to own the S&P 500, but you do want to own gold. In the same way, when business cycles are booming, as it is now, when you have this, nominal growth, you have inflation, monetary debasement happening every single day, people still hold gold. But in that first situation, when business and credit cycles are contracting, people sell their Bitcoin, and they shouldn't be. But at the margin, this is changing. It's not changing from the trading standpoint just yet. If you look at cross-asset correlations, which is the important thing to gauge here, Bitcoin is still relatively highly correlated to the S&P 500, the NASDAQ, the Russell, other high beta risk assets. However, if you look at the institution, at the market structure, at the buying makeup of who's allocating to Bitcoin, the cohorts are shifting pretty tremendously. In cycles past, it's been all retail investors, right? So you and me and our friend down the street who are looking at Bitcoin and going, man, this thing is taking off like a rocket ship. I'm going to get in and ride the wave. One thing about that is retail investors are very flighty. You and me, Bram, and the people listening are probably in the minority saying, I'll never sell my Bitcoin, or I'll sell hardly any of my Bitcoin. I'm a long-term holder. Most Bitcoin investors of cycles past are short-term holders. They're flighty retail investors, right? So they see the number going up, they want to ride the wave, and then all of a sudden, when it starts moving in the other direction, they sell off just as quickly. That's been the makeup of these market structure for prior cycles. This cycle, the dominant cohort of allocators are through these ETFs, the people purchasing these vehicles. And who are they, right? They're retirees, they're pension funds, they're endowments, and others, right? And all of these cohorts are generally longer-term investors. They have a much longer time horizon than your typical retail investor that used to dominate Bitcoin market cycles. And so this has changed the way that Bitcoin has behaved at the margin for this cycle. In cycles past, it's been relatively tepid, and then all of a sudden in year number 3 or year number 4, it explodes to the upside, in 2017, going from $3,000 to $20,000, in 2021, going from $10,000 to $68,000. But this cycle is a little bit different in that we've just taken these minor stair steps higher and higher. First, it was 20K, then it was 40K, then 58K, then 70K, then 90K, now 120K, right? It hasn't been this massive boom and bust. And so when you start to see that behavior changing in the way that Bitcoin trades, and the underlying reason for it is that it's being more institutionally recognized, right? The ETFs are not to mention the fact that, governments, the United States government is now purchasing this thing. The fact that banks like talking about purchasing this thing, banks like JP Morgan are now considering Bitcoin to be used as collateral for loans, right? That's pretty huge. And also to tie it all together with a bow, Bitcoin is now number 6, number 5, but it did pass Amazon the other day to become the 5th largest asset in the world. And so Bitcoin is now not only being treated differently because of its size, but it's also being traded differently, and it's changing Bitcoin's market cycles. So while moving fully to a risk-off asset, meaning one that people always want to own in good times, but especially in bad, is probably several years from now, if not a decade or so, I believe that turning point will fully come as Bitcoin approaches gold's market cap and then flips gold into becoming the largest single asset in the world. Even though it might be years down the line, you start to see these things. And this is the first cycle where the dominant cohort of Bitcoin buyers who are changing the way Bitcoin trades are long-term investors, right? Essentially Wall Street. Wall Street has come into the fray. They're not these flighty retail investors that buy, sell, buy, sell. You're talking pension funds, endowments, retirees, and more all across the country who are holding this thing for the long run. And that's changing the way Bitcoin trades. And it's just another step in the direction of Bitcoin actualizing its destiny of finally being this apex risk-off asset that people want to own all the time.